Welcome to The Explainer. So today we're going to tackle a question that, well, it seems to defy all logic, and honestly, it's frustrating a ton of investors out there right now.
All right, so let's just dive right into this paradox, shall we? I mean, you're seeing all these positive headlines, you're hearing good news about the economy, but then you go and look at your portfolio, and the numbers just don't seem to match up. It's confusing, right? And frankly, it's a little maddening. So what is really going on here?
Okay, so look at it this way. On one hand, we get what sounds like amazing macroeconomic news, like the Fed cutting interest rates. Logic would tell you, hey, that should be great for risk assets. But what are we actually seeing? The market does the exact opposite. Bitcoin might get a little bump, but then it dips from what could have been a new high. And the altcoins, they often get hit even harder. It's that classic buy the rumor, sell the news situation, and it leaves us all in a market that just cannot seem to make up its mind.
So to really get to the bottom of this mystery, we actually have to look away from crypto for just a minute. We need to focus on the biggest story in town, the one that's dominating all the investor attention right now. And that is, of course, artificial intelligence.
And here's the crucial point, right? Right now, AI is the main character on the market stage. It's the star of the show. It's sucking up all the oxygen, all the capital, all the headlines. And that means everything else, including crypto, is being treated like a supporting actor. You've got to remember, investor money isn't infinite, and right now, it's all chasing the hottest story.
And here's a perfect example of that ripple effect in action. When a huge tech player like Oracle comes out and reports disappointing revenue, its stock can just plummet. We're talking nearly 11% in a single day. And because the entire market is so hyper-focused on AI, that negative feeling doesn't just stay with Oracle. No way. It spills over and drags down other risk assets with it, and that includes crypto, which, let's be honest, a lot of investors still lump into that same high-risk tech bucket.
This intense focus on AI has a lot of people drawing parallels to the dot-com bubble back in the late 90s. And yeah, you can see the similarities, the massive hype, the huge investments, but there's one key difference this time around. See, back then, tons of dot-com companies had no real path to actually making money. Today's AI giants, think NVIDIA, are already raking in real substantial revenue. This isn't just a cool story. It's a massively profitable business, and that makes the whole narrative so much more compelling for investors.
But it's not just about AI. That intense focus on one single sector is actually just one piece of a much larger puzzle, a huge battle for capital, because crypto isn't only competing with tech stocks, not by a long shot.
Think about it. In past cycles, crypto was kind of the exciting new kid on the block, right? It was drawing in all that speculative money. But today, oh man, that capital is being pulled in a bunch of different directions. You've got the super powerful AI story, you've got traditional stocks hitting new highs, and then you've got this surprising comeback from a totally different asset class.
I mean, just look at the surprisingly strong performance of precious metals. Silver has surged over 4.7% to a new peak. Gold is also showing really solid gains. This is a classic safe haven move, It's often driven by fears about inflation or what's going on in the world, and it's siphoning off capital that might have otherwise flowed into something like Bitcoin. So, you see, crypto is effectively being squeezed from both sides, by the high-risk, high-reward story of AI on one end and the low-risk, safe appeal of precious metals on the other.
So, okay, we've talked about these big market forces. But beyond all that, there's another factor at play. And honestly, it's arguably even more powerful. And that's our own psychology, the human element.
We are just constantly bombarded with these huge, bold price predictions from major financial figures, right? Like you see Tom Lee from Fundstrat saying Ethereum could hit $7,000 by 2026. And look, headlines like that are exciting. They definitely grab our attention.
But let's be real for a second. Here's the hard truth. Nobody can predict the future. These forecasts, you've got to treat them like entertainment, not like financial gospel. Because what they do is create these really unrealistic expectations. And when those expectations aren't met on a specific timeline, what happens? Disappointment. And that leads to really poor decision-making.
I mean, a perfect example of this is the whole laser eyes thing from 2021. Remember that? The entire narrative was built around Bitcoin hitting $100,000 by the end of that year. So when it peaks at only $69,000, a lot of people felt totally let down and they sold out of sheer frustration. But here's the thing. The long-term case for it was still totally fine. And sure enough, Bitcoin did eventually cross that milestone in 2024. And all those people who let their short-term expectations drive their strategy, they missed out big time.
And this right here, This is a perfect example of the power of just being patient. 5 years ago, the insurance giant MassMutual made a strategic, long-term decision. They put $100 million into Bitcoin. And they didn't trade the daily noise, they didn't get caught up in all the price predictions, they just held. And today, that investment is worth over $500 million. That's a huge testament to the power of having a long-term perspective.
So the question is, how do we do that? How do you shift your focus from all that chaotic, emotional, short-term stuff to the foundational, logical, long-term view?
Well, it helps to think of news as a compass, not a GPS. Think about it. A GPS is constantly talking at you, right? Turn left, turn right, recalculating. That's the short-term noise. That's your daily price swings, the social media hype, all those price predictions. But a compass is different. It just points you in the true long-term direction. And those are the foundational signals we're talking about. Real regulatory progress, meaningful adoption by institutions, and key partnerships that build the actual infrastructure.
And the thing is, these foundational stories are happening all the time. They just don't make for flashy headlines. I mean, JP Morgan, the biggest bank in the US, is executing real transactions on Solana. The CFTC is clearing out old rules to pave the way for real innovation. You've got major economies like Australia and Japan building clear rule books for digital assets. These are the quiet but absolutely crucial developments that are actually building the future of this market.
Okay, so if those long-term signals are the what to look for, then what's the how? How do you actually do it? Well, for a lot of people, the most effective strategy to navigate all this noise and build on that foundation is, honestly, the simplest one. It's dollar cost averaging. It takes all the emotion and the impossible game of timing the market right out of the equation.
And the power of this strategy is just incredible, especially when you look at a worst-case scenario. Just imagine you had the worst luck ever and you bought Bitcoin at the absolute peak in November 2021 at $69,000. Ouch. But instead of panicking, you just kept investing a steady $100 every single month. By April of 2023, with the price not even halfway back to its old high, your entire investment would have already been in profit. That's the pure mathematical power of turning volatility into your friend.
So when you really break it down, good news and bad prices aren't really a paradox at all. They're a test of your perspective. Yeah, the market is constantly being pulled in a million different directions by these powerful stories like AI or a flight to safety in metals. But underneath all that daily noise, those foundational signals for crypto just keep getting stronger. So the question you really have to ask yourself is this: are you going to follow the chaotic noise of the GPS, or are you going to be guided by the steady, true direction of the compass? Thanks for tuning in to The Explainer.